Hello everyone, welcome to another episode of Decoding IPOs by Finance and Investment Cell, Kirori College. Today we are going to focus on Anthem Biosciences Limited. Anthem Biosciences, incorporated in 2006, based in Bangalore, is a contract research, development, and manufacturing organization, CRDMO, serving the pharmaceutical and biotech sectors. It provides end to end solutions from drug discovery to commercial manufacturing for both small molecules and biologics, catering to clients worldwide. Now, let's go through the IPO timeline. The opening date is July 14th, Monday. Closing date is Wednesday, July 16, 2025. The tentative allotment date is Thursday, July 17th, and the tentative listing date is Monday, July 21st, 2025. Now, let's go through the IPO details. The face value is 2 rupees per share. The issue price band is 540 rupees to 570 per share, lot size being 26 shares. Sale type, it's offer for sale, there's no fresh issue, and total issue size is quite big, aggregating up to 3,395 crores, but it's solely offer for sale. This can be a negative point as no money will be used in the growth of the company. Rather, all these proceeds will go to the promoters who are divesting their stake through this IPO. Now, let's go through the objects. The company will not get any money from the offer. All proceeds, after deducting the related expenses and taxes, will go to the selling shareholders. Moving on to the financials of the company. The financials are good. The revenue has increased 30% from 2024 to 2025. As you can see, in 2024, it was 1,483, increased to 1,930. The assets have increased. PAT, profit after tax, is also increased by 23%. It was 367 in 2024 and increased to 451. There's a growth in EBITDA every year. Net worth is increasing every year. Reserves in its hand have increased every year, and the borrowings are quite nominal and has reduced. As you can see, in 2024 it was 232.53, and in 2025 it reduced to 108.95. Then its ROE is 20%, ROC is 26%. It's if it's 15, it's considered good, but here it's even better. If you look at the debt to equity ratio, it is 0.05, meaning it's very balanced, and the company has almost no debt. So it's a plus point. Here's the peer comparison. First is Syngene International Limited, has an EPS of 12.35. Sai Life Sciences Limited 8.83. Cohance Life Sciences Limited has an EPS of 10.52, and another prominent name, Divi's Labs, has an EPS of 82.53. Considering the period of financial year 2025, Anthem Biosciences has an EPS of rupees 8.07, and the resulting PE ratio is 70.63, compared with the industry's average PE of 81.06 times, indicating an undervaluation. Hence, the price of the share seems fairly priced for the investors. Talking of GMP, the shares of the company are available at a premium of rupees 118 in the grey market today. Hence, its estimated listing price might be rupees 679, that is cap price plus the latest GMP. Subscription status: IPO is subscribed 1.71 times on July 15th. The public issue subscribed 1.25 times in the retail category, 0.41 times in the QIB category, and 4.51 times in the NII category. So now let's discuss these trends. Firstly, it's the GMP. It is coming out to be at 20%, but we cannot completely rely on this as it keeps on changing. The valuations and the financials of the company are strong. Also, it's a leading company in its sector. Coming to the negatives, there's nothing much. Valuations could have been a bit cheaper, but it's still fine. Issue is completely offer for sale, although the company doesn't need money. But if there's a fresh issue, it would have been felt better that the company is willing to utilize the money for the growth of the company. So it's a competitive sector, operating in the competitive sector. So though it's leading, yet it has to maintain and work hard to remain a leading company. So in conclusion, taking into account the industry's below average PE ratio alongside the robust GMP multiples, the IPO appears to be fairly valued. However, the concentration of revenues and dependence on just a few projects is a risk. Overall, it's a good company with great financials. Thank you.